Welcome back to the Deep Dive. Today we are strapping in for a ride across a really paradoxical economic and technological landscape.
That's the perfect word for it.
We have the world's biggest companies making these revolutionary leaps, things that promise to reshape entire industries.
But at the very same time, the markets, the policymakers, they're all operating with these huge gaps in the most basic economic data.
It's like they're flying completely blind.
It's a study in contrasts, really.
Wow.
And if there's one theme running through everything this week, it is this bizarre disconnect around information itself.
How so?
Well, on one side, you have this massive, just continuous surge of personal data, information that's perpetually harvested, sold.
And feeding the AI boom we keep talking about.
Exactly. But then on the critical public side, we have this stark and, frankly, dangerous lack of basic government data.
The jobs reports, inflation indicators.
All the foundational stuff. It's just missing, leaving the financial world guessing.
So our mission today is to take these contradictory developments, synthesize them for you, and try to figure out how to navigate this whole volatile environment.
Let's do it.
Okay, so let's start with the boom part of the cycle, the undisputed AI arms race.
And you have to start with the brains of the operation.
You mean Alphabet?
Of course. Their new Gemini 3 AI model just launched, and shares jumped, 3% almost immediately?
Right. And this isn't just some incremental update. Google is claiming Gemini 3 is way better at understanding complex questions.
And needs significantly less hand-holding, as they put it. Less prompting than Gemini 2.5 to figure out context and intent.
Less hand-holding is the key takeaway for any user, yeah. And it seems like D.A. Davidson analysts, they really bought into the hype.
Oh, they did. They called it a genuinely strong model.
And this is a quote, the current state of the art.
When they say Google has meaningfully moved the frontier forward, I mean that is a direct signal to Microsoft and OpenAI.
The pace is just accelerating.
It never stops. And if Gemini 3 is the new brain, then NVIDIA is still the undisputed engine powering all of it.
The hardware powerhouse.
Absolutely. They just reported their Q3 earnings, and they didn't just top estimates.
They blew them away. We're talking $57.01 billion in revenue. The street was expecting, $54.92 billion?
A significant beat. And these aren't just big numbers. They show a foundational shift.
And the guidance for next quarter is just as massive. They're expecting $65 billion in sales.
But the real number, the one that tells you exactly where every company is spending its money.
Data center sales.
Data center sales. It hit an astronomical $51.2 billion for the quarter.
Wow.
That number is essentially just pure AI infrastructure. It's GPUs.
Right. And CEO Jensen Huang even said that sales for their new Blackwell GPU were, quote, off the charts.
And that quote is so important because it just shows NVIDIA's unique position right now, their competitive moat.
They aren't just selling chips.
No, they're selling the only shovels in a gold rush. Every tech giant needs their Blackwell GPUs to even stay in the race.
Okay, but here's where that paradox you mentioned comes right back in. The sales are undeniable. The innovation is revolutionary.
But the market is nervous.
Very nervous. We saw U.S. indexes, the S&P 500, the NASDAQ, both hit these multi-day losing streaks. And it was driven entirely by concerns over AI valuations.
It makes you ask the question, right? If the earnings are that strong, why is the market losing faith?
Exactly.
Well, the market is great at pricing in future risk, not just current success. And I think a lot of investors are asking if this incredible growth rate is sustainable.
Especially with high interest rates.
Right. If rates stay high, the cost of capital for these massive data center projects becomes, maybe prohibitive. There's a fear that the future earnings you'd need to justify today's price just won't be there if the economy tightens up.
And we saw that volatility spill over globally, too. Asian Pacific markets were down, tracking Wall Street.
Tech companies took a real hit on the Nikkei 225. Companies that supply NVIDIA, like Advantest.
They fell 4%. Renesas was down 3%.
The market is basically saying, we believe in the tech, we just don't believe in the stock price right now.
Right. Okay. Before we leave AI, there was a really fascinating development in education, of all places.
Yeah, OpenAI. They announced ChatGPT for teachers.
Specifically for K-12 educators and districts. It's a huge play to normalize AI in the classroom.
Which is a massive institutional pivot, especially after all that initial panic about students using it to cheat.
Well, what's crucial here, and the sources really highlighted this, is the focus on building trust.
The privacy angle.
Yes. They're promising student data will be protected and, critically, that it will not be used to train their models.
And they're offering it for free for U.S. educators until June 2027.
They're trying to remove the cost barrier and the privacy barrier at the same time.
They have to. They know if they can't establish that trust, especially around vulnerable student data, they have no long-term play in this huge public market.
Okay, now let's make that difficult transition from high-speed innovation to high-speed policy uncertainty.
The macroeconomic fog.
Exactly. And a lot of that fog is coming from a serious data void.
It's a huge problem. We were just talking about the massive amount of data feeding the private sector.
And meanwhile, the Federal Reserve is struggling with the most basic public data.
Yeah, the minutes from the October FOMC meeting, that's the Fed's policy committee, showed they are deeply divided.
They did approve a quarter-point cut, which put the target range at 3.75 to 4%.
But there was zero consensus on what comes next.
Right. They're split. On one hand, you have a slowing labor market, which says they should cut rates.
But on the other, you have stubborn inflation, still above their 2% target, which says they need to hold steady.
And what's maybe most telling is that many of the participants suggested rates should just stay where they are for the entire rest of 2025.
That shows a really strong internal bias toward keeping rates high for a long time.
And they have to make all these tough decisions while, like we said, operating in the dark.
Because of the record-long federal shutdown, the Bureau of Labor Statistics, the BLS, confirmed they will not be releasing a full October jobs report.
That information gap is just enormous for market clarity.
It's severe. The October payroll data has to be combined with November's report,
which delays the full release until December 16th.
which is 6 full days after the Fed's final policy meeting of the year.
So the FOMC has to make its biggest decision of the year without the most recent, most comprehensive snapshot of the labor market.
And it gets worse.
It gets worse?
Yeah. The BLS confirmed they couldn't collect the household data during the shutdown.
Wait, so that means...
It means an unemployment rate for October cannot be included at all. It's just gone. A key pillar of economic data just missing.
That's incredible. And that vacuum had an immediate effect, didn't it?
Oh, yeah. We saw initial jobless claims hit a 2-month high, which suggests the labor market is softening.
So traders ran for safety.
Immediately. Gold prices jumped over 1% on safe haven demand.
And what about the odds of a rate cut?
If you look at the CME FedWatch tool, which is basically the market's real-time prediction,
Right.
the chance of a December rate cut just dropped significantly. The market is now pricing in steady rates, reacting directly to the lack of clear data.
So if the Fed isn't under enough pressure from all that, now we have the political dimension. President Trump publicly escalated his criticism of Fed Chair Jerome Powell.
Saying he would, and I'm quoting, love to fire his ass.
And he was urging his Treasury Secretary, Scott Bessent, to push Powell to lower rates.
And suggesting Bessent is the one holding him back from actually firing Powell before his term ends in May 2026.
This is such a high-stakes political game. It just injects another layer of uncertainty into a central bank that's supposed to be independent.
It creates volatility just by raising the possibility of sudden policy shifts based on, political whims instead of economic data.
Okay, so let's use that data problem as our transition. We just talked about the critical lack of public economic data. But let's pivot to the absolute flood of private data that we are all generating every single second.
Because this is where the AI boom and your personal security really collide. The battle for digital privacy.
It's the hidden cost of the AI boom, isn't it?
It really is. Your personal identifying information, your PII.
That's everything from your address, social security number,
browsing history, employment records, even who you vote for. All of it is being constantly sold by data brokers.
And these brokers aren't like small-time operations. This is a massive industry.
A huge industry supplying data for marketing, credit reporting, debt collection.
And crucially, a primary feed for training the large language models we were just celebrating.
Exactly. And this endless availability of your PII just drastically increases your risk profile. We're talking identity theft, those relentless spam calls, targeted cyber attacks.
If the information's just out there and easy to buy, the threat just expands exponentially.
So the question becomes, how do you fight back against hundreds of invisible companies trading your personal details?
Enter the data removal services.
These companies, like a Delete Me, an Incogni, or an Optery, They basically act as your automated digital defense team.
So you give them your information.
You give them your PII, and they use automation and sometimes human agent to just scour hundreds of data broker sites and send formal removal requests.
And what if the brokers just ignore them?
Then the services can escalate it to regulatory or even legal authorities.
Okay, that sounds like a perfect solution.
Yeah,
But there's a reality check here.
a big one. The sources make it very clear. Data removal is not permanent.
You have to treat it like a digital subscription service.
This is the cynical truth of the whole system. The data brokers are only required to honor a request for a limited time, maybe just a few months.
And since they're constantly scraping new data from public records, online activity,
Your data just starts popping right back up again. So if you stop paying that subscription,
you're just selling tickets back to the brokers.
it's security theater that requires endless renewal.
Okay, so for you, the listener, who might be considering this, let's give some practical comparisons from the sources.
Yeah, good idea.
If you want the most thorough approach, Delete Me is highlighted. It covers over 750 sites and gives you a report showing the exact count of PII they scrubbed.
But if your main concern is budget, Easy Opt-outs is a really affordable option. It's like $19.99 a year.
But it covers far fewer sites, only about 100 or so.
Right.
And then there's Optory, which is great if you're suspicious, which you probably should be.
Because they actually send you before and after screenshots to prove your data was removed.
And they even have a free tier that just gives you detailed instructions if you want to do it all yourself.
It's really all about taking back some measure of control over a digital footprint that is just perpetually leaking, a necessary ongoing chore.
Now let's pivot to the final set of intriguing developments. The kind of unexpected shifts and niche market insights that sometimes tell us more than the big headlines.
Okay.
Starting with a strange political move in California.
We saw the billionaire activist Tom Steyer launch a Democratic bid for governor.
And what's so fascinating is the framing. Despite his immense wealth, he is explicitly positioning himself as a champion for consumers and the working class.
A populist billionaire.
Exactly. He specifically emphasized making corporations pay their fair share again.
Citing his past work, right? Like the initiative to tax corporations back in 2012.
And the big tax hike on tobacco products in 2016, a very interesting political tightrope to walk.
For sure. Meanwhile, over in commodities, geopolitical maneuvering is directly shifting prices.
Oil prices fell sharply.
And that was following reports that the U.S. is pushing seriously for a Ukraine-Russia peace framework.
That is a classic geopolitical hedge. Analysts immediately started saying that peace, even a fragile peace, could lead to a lot more Russian oil returning to the market.
Which adds to oversupply concerns and could drive prices lower for everyone. The risk premium just starts to dissolve when peace is on the table.
And then we have what's being called the Great Housing Paradox.
Oh, this one is interesting. Redfin put out a report for October claiming the largest gap between sellers and buyers since 2013.
Citing 36.8% more sellers than buyers in the market. They called it the strongest buyer's market in housing in more than a decade.
Okay, but that statement needs a giant asterisk next to it.
A huge one. The sources were quick to clarify this. This market is only strong for people who can actually afford it.
If you're a first-time buyer or anyone who needs a traditional mortgage, this report means nothing to you.
It's a buyer's market for the wealthy.
That's it. Affordability is the single biggest challenge. Prices are up, 50% nationally in 5 years, and high mortgage rates are just locking everyone else out.
So there's plenty of inventory if you have cash. For everyone else, the market is totally frozen.
Completely frozen.
Okay, finally, let's look at the ultimate collision between peak performance and market reality, and we find it in the luxury sector.
Porsche unveiled the all-electric 2026 Cayenne EV.
Calling it the most powerful production Porsche ever. We're talking 1,139 horsepower. 0 to 60 in 2.4 seconds.
Absolutely staggering performance. But this is the thing, it highlights the struggle of the mass EV market.
How so?
Insiders are saying that superior speed and performance just aren't enough to sell EVs to the general public anymore.
The novelty is worn off.
Right. The market has reached a point where the focus has to shift back to the basics. Price, charging reliability, and, just range confidence for the average person.
And you contrast that automotive struggle with the high-end art market where money is just flowing.
It's a completely different world. Gustav Klimt's portrait of Elizabeth Lederer sold at Sotheby's for a jaw-dropping $236.4 million.
$236 million.
It became the second most expensive painting ever sold at auction, and it's just signaled this massive renewed optimism at the very high end of the art market.
It's a strong indicator of where significant wealth is finding a stable, high-value home right now.
For sure.
So if we look back at this whole deep dive, we see this incredible velocity of AI innovation Gemini, NVIDIA, right next to the instability from the economic data gap and the political meddling at the Fed.
And all of it is fueled by this battle for digital privacy that requires this active, continuous self-defense from you, the individual.
The connectivity is crystal clear.
Yeah, technological speed, whether it's AI scaling or a high-performance Porsche, is just running far, far ahead of structural stability and clarity.
The economic indicators are murky, policies divided.
And your personal security requires this huge, continuous effort just to maintain the status quo. We are in a dynamic where the most valuable things are defined by exponential advancement.
But the most critical things, like economic transparency and basic privacy, are defined by this frustrating, difficult maintenance. That leaves us with a final provocative thought for you to chew on. If the world's most valuable companies are now fundamentally defined by their ability to scale AI, which we know relies on the perpetual massive harvesting of your personal data, how should we weigh the enormous economic benefit and innovation of the AI boom against the necessary, continuous, and seemingly endless effort required for you to simply maintain basic personal security and privacy?